think I fixed it. I think I fixed it. Yeah, Zoom was so much better, right? All right, so let me know. We're good now, right? Good. Lost my voice due to screaming at the markets. Exactly. All right, let's go. We're here. We made it. We decided to put a stream together in about 45 minutes, and between Ryan and myself, we only messed it up here a little bit. So welcome. Thanks for bearing with me. Good to see you guys as always. What's up, Herv, Graham, Tanush, Jake, Kulu, Rodrigo, Matt, Micah? What's up? Micah and I are gonna play golf on Friday. Actually, he's coming into town. We're gonna go play. What's up, John, Daniel, AJ? What's going on, y'all? Yeah. So here we are. So as you guys know, what this webinar is usually about is mentoring for you, essentially, right? It's me offering myself to this community, this Apteros community, Nadro community. How can I help you? What questions can I answer? Um, oh yeah, have y'all seen the promo? I guess, or the grand prize for the intensive is that live? Based on what Kulu just said there, I'm guessing that's out there. I recorded that video a couple days ago for Ryan. So yeah, somebody's gonna get if you haven't seen, if you're in the intensive, if you sign up for our fall intensive, which is me trading live every morning, starting with my pre-market prep all the way through executing the trades. It's a Q&A session midday. It's an end of day review with me in the afternoon. It is just obviously I'm biased, but I mean outside of learning the details of Nadro methodology, if that's something of interest for someone, what more could you ask for in terms of insight into what someone like me is doing day in and day out for an entire week? It's pretty cool. When I put stuff like this together, it's what would I have wanted, right, back in the day? What would what would have been really, really helpful to me when I was trying to look for a direction of where to go and what to do? Um, anyway, so it's pretty good stuff. Okay, so Kulu was asking about the Q&A. We're just going to use the chat here. I don't know of any other thing to do. So if you have a question, guys, pop it in the chat. I'm staring at it right now. And I'll take your questions. First come, first serve. I was going to post. So I was down for most of the morning session. I'm not currently down. Call it break even. I'm up a little bit. But I was gonna post that big red number, but just because I've been posting some green ones, I was gonna post that red one with pride, but unfortunately it has turned green, so not gonna do it. Let's see. Graham says, question: what tells you during your prep that tells you not to trade today? That is a really good question. Um, let's make sure the audio stays good, everything stays good. Cool. Cool, 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 cool. It's working. Um, let's just take a basic example here. Let me repeat the question. What tells you during your prep not to trade today? And let me take it even a step further. Okay. What might be a situation in which I'm not going to trade until something changes, right? Because that's more often the case. But actually, Graham, if you want to follow up in the chat here, um, are you talking more about self prep, something going on with me, something that might cause me to say, I'm not trading today? Or is your question more geared around the technicals of the market and when and where I might say, you know what, there's no opportunity for me here? Which would you like me to talk about? Okay, Graham, more about myself. And sorry, I think there's about a 10-second delay here between when I say something and when you see it. So, anyways, more about myself. Great question. A lot of, let's get rid of the chart here then. A lot of traders don't do a self prep. What do they do? What do they do? Where's my notepad here? Their prep consists of wake up, coffee, markets, right? That is analysis and then start trading. Sometimes they start trading before the analysis is done. That's what a lot of traders' prep looks like. Somewhere in this section here, before we get to markets, we need to focus on us, right? Me. Pick your pronoun there, right? We need to look inwardly. And so, what are some really good things that we can do to help us be our best, help us be more self-aware, and help us get ready for trading session? Well, I think there's a handful of things. One, I like to take a look at big picture goals. I think that connecting with bigger picture goals, things that you're really working towards that are motivating to you, right? Even emotionally motivating. I think it's an emotion, right? It's really important that you connect with those because it will empower you, if you will, to do the right thing when it's hard, to stick to process, to follow a rule, to manage a trade that like you should rather than how you're afraid of. Connecting with that's a big deal. Two, more granular process goals. All right, what are you working on today? How are you redefining what it means at the end of today's session, whether you say that it was a winning session or a losing session? And guess what? That's not P&L. That's how you carry yourself. That's how you go attack something that's within your control. P&L is not within our control in the short run. Okay. I want to buy some S&P here. Self-confidence. In fact, maybe not self-confidence. Let's just make it confidence level. What's your confidence level coming into this session? And this is a big one. This is where we start to get to Graham's question around what might I see to cause me to not trade, right? Usually it's not this, but let's talk about it, right? I like to think of it like, like a gas tank meter for those of you who still drive fuel cars like me, right? Are you empty or are you full, right? Where is your meter, right? Is it here you're really really full? Is it here you're really really empty, like running on fumes, right? What's that confidence level? And this would be overconfident and this would be underconfident. And a lot of times it has to do with what's happened to you recently, what happened on the last session, things like that, right? It's a recency bias kind of deal. But you could have been getting beat up really bad the past week or so. What's your confidence level like? If you touch upon that and admit where you're at with that, we could spend the rest of today's talk talking about it, but you can tweak how you feel and moving towards improvement with what you're going to do. For example, if you know that you are really, really beat up and underconfident, you need to just give yourself that little extra boost saying, hey, when my trades are there, I'm going to take them, right? It's my job to sit in my seat and take my positive expectancy trades, no matter what the last 3 or 4 trades have looked like, right? And vice versa for overconfidence and things like that. I'm going to stick to my risk plan. I'm not going to think I'm smarter than the market, blah, blah, blah. Basic things here, right? Are you too sick, right? COVID-19 have you down bad? Are you too tired? Do you have a newborn, right? I had a fairly large drawdown when my son was born, right? I tried to keep pressing and it was just too much. There was too much changing in our routines and lifestyle, and I'm a big sleep guy. I need it bad. And obviously that wasn't happening. I'm worried about if this precious little thing is still breathing over there, right? So assess yourself, right? Have you been in a big fight, right? Emotion, upsetness, right? Now we're really getting to the nitty gritty. And guys, this is like a long talk here, but this doesn't take long. You can run through this pretty quickly. So I think those are some really good parts of a self prep, a self check-in before you even look at a chart or what's on the econ calendar for today, right? I think these are really important things. I think if you do them consistently, they will help you. Okay. Let me scroll up and find where our next question was. Duda, I love saying that. Duda, hi Merritt, what's your opinion on mental P&L target for the day? I often find myself stopping trading after a few profitable trades, but fight all day when I dig myself into a hole early on. Amen. You and I are cut from the same cloth in that way. When I'm down, you put my back against the wall, baby, I'm gonna fight out of there, right? Right? I have no problem seeking risk, seeking to win, right? And I think a lot of us traders are that way. However, you book a few decent winners, and then you get that next trade that's setting up, and those alarm bells are going off, and you're saying, I'm up 3.5 R today, I'm up $1,700. Do I want to risk? I don't want to give that money back now. I've got this precious money that I've made here, these R's. Hold on to them, right? That is the mentality. And what I've found is you have to, one rule can help you, and it's called a give back rule. But beyond that, you need to kind of reframe what your job is as a trader, right? I talk about this in our mental framework section of the NADRO course. It's very important to reframe what it means to win or lose as a trader. It's very important to reframe what your job is, what you're supposed to be doing, what you're actually attempting to do as a trader. Because it's not what we think when we first get into trading. There's more to it. There is more of a job to it than you think, oh, just freedom. I'll do whatever I want now. I'm a trader. Yay, the lifestyle. Well, guess what? Now, you have to be disciplined. You have to do these things. You have to essentially create more rules for yourself and go follow another job, right? So it's not total freedom. So anyways, the one rule that can be really helpful in terms of giving yourself the freedom to keep swinging at pitches, if you will, is what's called a give back rule. Set a threshold of P&L. Let me go back to the screen. Set a threshold, right? Let's say, right, these are units of R. This is where we start our P&L at, right? This is 1. This is when we're up 2. This is when we're up 3. And why do I do units of R? Well, that's because I don't care if you're, risking $5,000 a trade or you're risking $5 a trade, right? On an event contract or micros or whatever. It doesn't matter, right? That's the beautiful thing about trading is you start doing it and it's scalable, right? You can scale it up once you do it small. But first, do it small. That's why we have the tryout. We start our junior trader small. That's the whole process. So the give back rule. Let's say that we set ourselves around a 3R threshold, right, for our give back rule. So we start our day, maybe we draw down a little bit, maybe we get 1.5 winner, 1.5 R, we draw down, and then all of a sudden we catch a really nice winner, and we close the trade out, and we're at 3.5 R for the day. Well, at that point of a closed trade, not open P&L, but closed P&L, we now initiate the give back rule, which I'm going to make one up here. It says that we will only now risk 2R for the remainder of our session. So what does that mean? Let's say we had an initial stop for the day of minus 2R. We can't see that down below. It's not, I didn't do my drawing very intelligently. But we didn't hit that. We kept going. And so now we're up 3.5R and our daily loss limit is minus 2R. So that means we're still risking 5.5R. The give back rule says, no, we're not going to risk 5.5R anymore. We're not going to ruin a risk turning a really nice day into a really bad day, right? It's a form of risk management. It's no different than kind of a trailing stop on an open position, right? Except we're now trading our own P&L in a sense. So we're only going to risk 2R. So from 3.5, we go to 2.5, 1.5. So now this becomes, from this point forward, this becomes our new daily loss limit, right? You could set it tighter than that, right? You could say I'm only going to risk 1R from the after the point, right? So essentially one full stop out. That could be it, right? And so the point is that mentally, this gives you a reason to say, you know what? I'm protecting my day in a reasonable way. If conditions are still favorable, if my setups are still showing up, my job is to take them. And I have a way to protect my day as a whole, continue to give myself the freedom to go after that. All right. Another question. Sushant says, why don't you use long-term VWAP on one single chart rather than making levels on your HYPO charts from long-term VWAPs? All caps. Question mark, question mark, question mark, question mark. Why don't I from? Okay, so if we were to just take all the long-term VWAP levels from 4 different charts, and you got one here, and you got you know, one here, and you got, you know, one that's here and way up here, and you got, you know, another one that's one here and one here, right? Well, as you might can imagine by looking at this chart, what are we supposed to do with this, right? And then you got price action, which is doing this. Like, what in the world? I can't handle that. I need to assess each of those individually on a top-down approach and then arrive at some conclusions, arrive at an understanding of what the market's up to across various time frames, rather than trying to do it all on one chart. And then, most importantly, I come in and I now have an understanding of, rather than line here, line here, line here, line here, line here, line here, and trying to do something with that, I say, aha, this one doesn't matter today. This one is super important. The confluence of these two is super important. This one doesn't matter. And this one's interesting as like a marginal reference if we get down there. But my main bias and line in the sand is going to come from this area here. We have some dissonance up at this confluence area here. And then this is a level I'm interested in perhaps taking some profits if maybe I'm short underneath the main line in the sand. So it simplifies all the messy data and everything. It allows me to actually read the narrative of the market and see what's going on in a more efficient way, and arrive at a simplified, really simplified is almost the wrong word. We are simplifying, but really what we're doing, what we refer to it as, is ranking pieces of information and distilling down information into its most critical pieces. That's how we arrive at a good DMI, or for you guys, for a good HYPO. Most important quality for a futures trader. You know, those are impossible questions just to say the most important, because on one hand, I might say that, you know, you have to have tenacity and stick-to-itiveness to, and essentially resiliency is what I'm saying. On the other hand, I might say that you have to have, or develop at least, a supreme sense of risk is more important than anything else, right? Because if you can't do that, it doesn't matter how good you are at anything else or what skills you have. So I'm going to say risk management is the most important thing. And again, it's a quality, right? So it's not the topic of risk management. It's the trader who takes responsibility for that and puts it upon himself to make it a supreme priority. That's the most important quality of a futures trader. Rodrigo says, hey, Merritt, can you please talk about how to set a daily loss limit? Outside of any capital constraints or requirements, which I'll let you sort through that on your own, you want to say, what's the number of trades that you need to take per day, right? If you're a short-term trader, you know, scalping, for example, do you think it makes sense to limit yourself to one trade a day and that you can just sit on your hands and wait for that one perfect trade? No, that doesn't make sense, right? You're a scalper. You give it a shot here. Order flow looks good. Something changes. Boom, you're out of it. You wait for it to reset back up. Boom, you're back in. Like some of the trading you guys have seen me do on Twitter lately, sharing what I've been doing. You know, if I were to limit myself to 2, 3, 4 trades a day, I'm cutting myself off at the knees, or whatever the phrase is, right? I'm shooting myself in the foot. I'm overly limiting myself. However, if you're way more of a long-term trader, maybe 1, 2, 3 trades a day, I've seen people have success with implementing those rules that forces selectivity upon a previously not very good at being selective trader. So figure out a good number for you that's enough freedom to do what you want, but not too wide in terms of, and just go crazy with it and do whatever you want, right? You can do what you need to give your methodology a chance to be successful that day. What is that number? Let's say that number for you is 5. What does, in general conditions, maybe with elevated volatility or whatever, what is the general stop distance to for your trades, right? So for some people, that's really, really wide because they trade with wide stops. For some people, it's pretty tight. For everyone, it should vary based on volatility conditions a little bit, right? People who say, I trade the S&P with a 2-point stop. Well, no, you don't. Well, you do, but you don't do it very well for sustained periods of time. You don't. You can't. You won't. Period. You have to be dynamic in terms of the amount of room you give a trade based on the current volatility at hand and how wide the stop needs to be. You have to be dynamic with dynamic markets. You can't just set your little fixed. Anyways, I'll move on. What's your stop distance? And again, we're just gonna have to say, all right, in general, what is it for the market or markets you're trading? You need to multiply kind of that times like the tick value, right? So if you're trading the S&P, right, that's $12.50 a tick times however much stop distance you typically need, or maybe the higher end of the stop distance that you need. So that's going to tell us the minimum amount. Well, we could put a sub question here, possibly. Do you have to have more than one contract. Okay, like this. That's my shorthand from a business school class where they'd use that symbol for contract. More than one contract. Do you have to do that? Do you have to trade a 2-lot? Do you have to trade a 3-lot to do what you do? Be reasonable. More people should just trade a 1-lot when they're starting out and get used to having to sit in a trade and having to be okay with the discomfort of open P&L. It's good for you to experience that, by the way. So then you just multiply these two things, right? Number of contracts you have to have times this kind of minimum risk that you have to take. So let's say for our trading, just make it simple for me, that equals to $100. We have to be able to risk at least $100 on any given idea for those variables. Well, guess what? Now we have an understanding of our daily loss limit, right? ELL is going to be around $500. You could give yourself a little more cushion just in case there's some slippage, or you could just be just a little tolerant of, okay, I'm down 400 after 4 tries, or I'm down 425 after 4 tries. I'm just going to take a normal trade here and attempt to risk, around $100 on this next trade, right? Now, the underlying premise with some of this that some people don't get is that in order to do this and then effectively do it, you don't just go trade the same number of contracts for every trade that you take, right? You don't just go trade a 3-lot every time with the exact same stop distance. As I said, if your stop distance varies, then your size varies in order to target $100 R value, right, per trade. And then DLL is a multiplication of how many times you need to give that a shot. That's how I recommend coming up with a DLL. Obviously, there's other constraints. Maybe you can't afford to risk $500 a day. You need to find a different way to trade, a different product, smaller size, smaller value, right? Maybe you need to risk more for some directive that you've been given or whatever. Maybe you're in, something like the Apteros tryout and you need to make sure you stay under our imposed DLL. You need to figure some of that out, right? But these are the variables that you need to consider. It's a great question. What is next? Jake says, was ES today imbalanced down on narrative? I went looking short on DVA once imbalanced down, but got a bit chopped. Then I felt I was only looking for shorts and missed the long side. Yips. Sounds like you don't fully understand narrative. No offense. There isn't just like the narrative is imbalanced down. That's not a thing. The narrative is that ranking and distilling of one time frame that's imbalanced down and one that's rotational and one that's forming this setup and one that's forming that setup, and finding what's the path of least resistance, if you will. That's what the narrative is. And where there's a really good line in the sand that tells us where things change or where that idea is wrong, and where there's likely destinations that the market is running to that we can see that makes the most sense based on any dissonance that we have to sort through, right? So narrative is way more complex than I feel like you're asking here. So ES, is it imbalanced down? I mean, on some time frames, sure. On other time frames, no. We ran into a situation today with the S&P where, in my opinion, we hit multiple extremes on multiple time frames, and it's that classic. You guys have heard me talk about it on Back in the Black. You've heard me talk about it in the NADRO course. When we're hitting extremes on multiple time frames, we tend to look for more of the reversion type play, which is where most of my traders made money today. Some equity longs. So yeah, I'm afraid that there's maybe a bit of more studying for you to do there, Jake. But in terms of, the DVA with ES, we briefly got imbalanced down. I'm looking at ETH here. One could argue that, say, from 8:50 or so Central Time, my time, up until that got violated at 917. 917, we're rotational. We've just wicked the overnight lows. We're coming off multiple time frame extremes, and we could play the mean reversion, right? Not to mention that, but we got a massive shift in order flow. So I think, Jake, that you haven't been through the NADRO course, and I would highly, highly suggest going through that if you really want to get good at trading in that type of manner with narrative and DVA and whatnot. Uh, Fanwell. Never heard that name before. Fanwell. Hi Merritt. I found a good edge on market profile. Standard deviation, dome. I don't know what that is. I know daily range using market profile, daily patterns. I want to get hired by a firm I trade. Which do you recommend me? How about mine? Go to apterostrading.com. You can see how you can be a part of what we're doing. Alan says, what rules do you follow to say you will trade against or fade the narrative? More so a principle than a rule. It's kind of like I need to see a minimum amount of risk reward on the table, and I need to see really, really good short term signals that ever allows me to trade against a good narrative that I've identified. That's the rule of thumb for me. So I call those scalps whenever I do that. And the short-term conditions need to be really good, and there needs to be a minimum risk reward before I run into the trouble. Right? If you're trading against a narrative, that means that let's draw it out here a little bit. If you're trading against a narrative, that means you're thinking about getting long right here, and the narrative says we are bearish from here, right? But maybe there's some shorter term things. Maybe yesterday's profiles here and we're breaking out above it, right? Maybe order flow is really strong, some divergence, whatever. And so you say, okay, can I trade from here to here? Does it make sense? Are the short term conditions good enough? And is there a minimum risk reward, right? Can I get at least 2-to-1, at least 3-to-1 on that idea for it to make it worth putting capital risk there and going against the narrative? And the most trickiest thing, or the trickiest thing I should say, is if you're going to do that type of trading where you're going to blatantly go against the narrative. The worst thing that I see happen to people is actually not sometimes the entries that go against the narrative. It's actually the fact that they end up missing the way better trade because they get too zoomed in on their scalp idea. They get greedy, they get whatever, and then they actually miss the way better trade. So don't let the opportunity cost of doing any scalping get in the way of your main better idea trading. All right, guys, we will take one more question. What was your process of thought this morning which led you to some red? I don't know how to answer that. Sorry. Hulu says, how often do you update your process? When was the last time you updated it? Why did you update it? Great question, Kulu. The last time I updated it would have been at a quarterly review. I added some sections which allow me to do more of what you've kind of seen lately, because guess what, coming into October, guess what I've been doing more of? Scalping, right? So I've been scalping more. I have been public about this, that even as good as NADRO is, these current choppier conditions were making it tough to hold core positions for intraday standard, just easy moves to destinations. just kind of the conditions that we've been dealing with here. So how have I adjusted to that, and how did I adjust my process? Well, it was around operating on some shorter time frames, taking profits quicker, less frequently holding for the bulk of my positions for the bigger moves, right? Scaling out of more quicker at intermediate targets and things like that. So, great questions today, guys. We ran a little over in terms of time. I have to hop off, but thanks so much. Thanks for the kind words, Manveer. Um, we will see you guys. Sorry for the technical issues early. We'll see y'all next week. Take care.